Okay, guys, so this is one of my favorite setups when it comes to trading. TGIF, thank God it's Friday play. Now, this type of play is something that you can kind of use so I wouldn't say every single week, right? It really depends on how many pairs you're watching, but it's something that I like in terms of reversal play that's very, very consistent with very, very simple rules. And it's something that you can add to your toolbox in terms of plays that you can have in your toolbox whenever you need to kind of play something towards the end of the week. Now, on Euro, we've actually had it twice so far in the past 2 weeks. So I'm going to go ahead and actually show you guys a few examples, go through the rules, and go through everything in regards to the system. Now, the idea behind TGIF. So, at the end of the trending week, there typically will be a reversal that occurs, which can offer a setup to close out the week. So, if the market has been pretty much, let's just say the market has been bullish, so the market has been bullish. If we hit some sort of higher time frame level, typically there's going to be a reversal. If Monday, Tuesday, Wednesday, Thursday have been kind of one sided, ultimately it's a reversal play that can be offered with a high level of probability because we know that at the end of the week, typically there's going to be some sort of profit taking. There's going to be some sort of move off of a specific level. So this is kind of like the idea behind it. Now, it won't be present every single week, like I said in the beginning, because not every single week is going to be a continuous trend, right? Some weeks we're going to have maybe consolidation. Some weeks we might be consolidating Monday to Wednesday, and then Thursday, Friday is trending. So again, it's not going to happen every single week. However, if you watch across multiple pairs or assets, you could potentially find something week in, week out. Right. So if you're someone who's only watching one or two things throughout the week, you're probably not going to get it every single week, and you're going to have to wait. But again, this is why it's like an additional setup that you can add to what you're currently doing, just because it's very simple, and whenever it's there, it's very easy to execute. Now, let's go ahead and understand the anatomy of a daily candle with TGIF, right? It's actually supposed to be a weekly candle, so that's my bad. Now, imagine, for example, on the bullish week, right? Typically, we have the opening price. Let's just say price went down on a Monday, Tuesday, and then let's just say we started going up Wednesday, Thursday, and then going into Thursday, Friday, price is essentially going to potentially make the high for the week, and then we're going to retrace a little bit off, and then the candle will be a bullish engulfing on a weekly perspective. Knowing this, we know that, hey, the high for that specific weekly candle may potentially be forming on that late Thursday going into Friday. And that's an edge that we can have in order to find a potential short setup on reversal play. Now, I'm going to show you guys the examples that I personally used and how I would enter on something like this and what are the requirements that I need in order to execute this very simple play. So let's go over this type of example. So I'm going to use a bullish example on a reversal play just because the examples I'm going to use on EU are on the bullish side. Now, let's just say on Monday, price starts the opening and then price pushes up, starts to head down. We start to maybe consolidate Tuesday going into Wednesday, then maybe see it decline further. And we see it going into Thursday, maybe another rally up, and then start to see that decline. From Monday going into Thursday, pretty much price has been in one sort of direction. Now, let's just say from Thursday going into Friday, price reads a higher time frame level, which is an area we can anticipate a potential reversal. So let's just say maybe this is an order block on a higher time frame. Maybe this is an imbalance point on a higher time frame. When price hits that specific level, now we can anticipate a potential reversal to close out the week. So here's a good example. Let's say price hits that level. Maybe we accumulate overnight. Price has some sort of a displacement. So we start to form an imbalance. And then price retraces into that displacement, into that imbalance point. And then we see a subsequent push up. This is something that I personally love to see, where ideally if we take out a liquidity pool into a higher time frame level, and then inside the kill zone, whether it's Asia or London, price creates an H1 imbalance point, and then we retrace back into that level during another kill zone. So let's just say Asian session, maybe price takes out a prior day low, then we start to see an impulse push up, right? And then on the H1, there's an imbalance that was formed. When price retraces back into that level, now I'm going to be looking for a buy inside of that London kill zone when price retests. Again, very simple rules. It's not rocket science. And then the target can either be, if you draw a fib, you get the extension targets, or maybe some sort of premium level or liquidity pool to the left. Now, for the price objective and target, again, typically we'll see about a 20 to 30% of the total range from the week open to the potential low. So let's just say from this potential high down to that potential low, if we draw a Fibonacci, 20 to 30% of that range. So around the 0.2 or 0.3, though that's typically a baseline, right? Again, it could go much higher, but that's typically a baseline on a week where you can anticipate a reversal. So let's just say maybe on the 0.30, right, on the 30% of the range, maybe there's an imbalance here or something like that. That's just extra confluence of a potential upside objective. Now, again, remember, because it is a reversal play, it's not like we're anticipating the market to kind of soar up and take out the week's highs, right? We're just trying to play a specific move off a potential low, catch a piece of the move, and get out. It's not trying to anticipate a reversal, and then the market, is going to have a full-on reversal to clean out those highs into next week. Now, we can also just target an opposing reference point that's nearby on H1/H4 or daily. When we have this and we have the 20-30% kind of aligning, that's typically a really good objective low end that someone can utilize. So let's go ahead and let's do the recap. So from Monday going into Thursday, price should be one-sided for the most part. Price heading into Thursday, Friday hits some sort of higher time frame reference point, which we call terminus, as ICT would call it. Once price hits that higher time frame reference point, we can wait for displacement after a raid or just a regular displacement. When it comes to displacement, I would like to see it on H1 because so many people ask me, hey, what time frames do you use? So I'm going to start being a lot more in depth in regards to this. So I would like to see it on H1. So with an imbalance forming inside of a session kill zone. Now I'm going to show you guys more visual examples so that way you can see exactly what I mean in terms of this. Very, very easy, very simple. And again, it's just something I would like people to add if they feel comfortable trading reversals, right? And this was something that ICT taught back in the mentorship back in I think it was 2019 or 2018, where I personally found it helpful because I am typically a contrarian type of trader. I do like playing reversals sometimes when it makes sense. So let's go ahead, let's get into the charts and let's see a few examples. Now, guys, if you want to get the slides to this PDF with the chart annotation and all the PDFs I'm going to be posting on this channel, make sure to check my public Telegram. The link is in the description below, guys. Join that Telegram and you're going to see the PDF already posted in there. And I'm also going to have a link to my website where, you can just sign up 100% free. So anytime I upload any new PDFs or any new webinars, I'm going to post it inside of the website. So make sure to check that out as we go ahead and we get into a few examples. Now, before I do actually, make sure to subscribe to the channel because I will be creating a full market structure and SMC course on this channel starting the next week. You don't want to miss out on that. It's going to be a full guide, guys, from start to finish on market structure and then start to finish on all SMC concepts. So make sure to subscribe, put the bell notification on because we have so much to come in the coming weeks. Okay, guys, so let's go ahead and let's go into a few examples. Now, so this is a Euro Weekly, right? I'm going to go over these past 2 weeks, but for your study, right, what you can do is you can go to each specific week where there was a very nice move or a very nice specific trend. So let's just say maybe this week right here, right? Or let's just say you want to identify this specific candle right there. Or let's just say this candle right here where it was a bearish and then we come off the low. Or maybe a bullish one right here, this one right here, maybe this one right here as well, this one. And the whole point is to see during those weeks, do we have those requirements, right? Because remember, the whole point is this. Let's just say when we have a down week like this, if it was down from Monday to going into Thursday, the move that we're looking for is this right here. You see that low that kind of comes off, the pretty much that creates the low of the week. and price pushes up and has like a little bit of a bounce. Same thing with this. Price kind of has that drop, it creates that wick low, and then price closes. So again, you can go to any weekly time frame, see any specific candle that's like that, and then go in and then go during that week and see, hey, you know, was there a TGIF? Was there a Thursday slash Friday reversal play that formed, during this time frame? So that's just something that if someone's like interested in this setup and wants to backtest more data, they can go ahead and do it from this pair on Euro, or you can do it on GU or whatever pair that you're comfortable with. So again, the whole point is just trying to find that retracement to close the week. Same thing with like this candle, right? And this one might have been a good example. So if you want to study this one, this was on the first week of April. And the reason why I like this one specifically is because we also cleared two prior weekly candle highs. So if let's just say Thursday or Friday, we run out those highs, that could be a potential for a retracement going into that. Now, let's go ahead and let's use this specific example here on, this was the week of May 15th. So the price at this point was, had two consecutive weeks down. Now, price also reached into this area, which is a volume imbalance. So, a volume imbalance kind of acts the same thing as an imbalance point. It's another reference point that we can utilize. Look how price reacts right into that level. Now, we know that this is a very key pivotal point. Now, when I understand that this is a key level, if price hits this at a specific time of week, I know that we're potentially going to have a move off of it. Now, it's not to say that price is going to hit here and then we're going to make new highs. However, we can anticipate a reaction off of this level, especially if it's occurring at the end of the week with the TGIF play when we have a very bearish week to start off. Now, let's go ahead and let's see what happens during the week. Okay, guys. Okay, perfect. So now I just added the day of the week, and for people that might ask, it's this day text indicator. So it's this one right here, TGFX Day of the Week Indicator by Ray Vaughn. It's this is the exact one if people are interested in it. Now again, let's go. We have Monday scenario here where Monday was kind of range, had a little bit of an upside move. Tuesday price runs up, clears Monday's high, and then we start to see downside. Wednesday we see decline. Thursday we kind of go into a little bit of a pullback mode until we finally decline. And going into Thursday into Friday, price reacts off of this level. Now, this was a setup that I actually took and I posted it on my Twitter and I posted it in my free public Telegram. Make sure to join. Description in the link below. I posted this in there and I said I was going to make the video last week, but things came up, so I'm going ahead and make the video for this week. This is like textbook. This is my favorite all-time TGIF type of setup where we have a prior day low right here, right? So this was Thursday low that the market formed. Notice how we kind of stabbed into it once, stabbed into it twice, and look what we get here. This is my favorite bread and butter type of scenario, right? Price took out prior day lows, and then what do we have here on the 1 hour time frame? On the 1 hour time frame, we create a displacement. So again, very, very easy, very, very simple play. We have an imbalance that forms inside of the kill zone. This was during the London session right here, as this was around 2 o'clock, 3 o'clock a.m. Eastern time. Now, the thing I like most about this as well is that we also have a very clear objective, guys. We have pretty much this prior consolidation in here. We also have this imbalance to target. So again, anticipating a potential move from here to here, this is where I thrive, right? I like to find two clear identifiable ranges where, hey, I have this essentially this bullish range that I can look for a potential buy-in with the proper framework, and then have a very clear objective where the market has an easier run to get into that area. Now, also, when we kind of draw the full, now that was one side of the equation. Remember, if you want to see, and again, you don't need to do this, but if someone wants to be a little bit more accurate, a little bit more concrete, you can target the 30% mark. Because remember, the high end of the range versus, again, we're anticipating this is potentially the low. So what type of retracement can we see? We can reasonably see something back into that 30% mark. And in this example, it lines up right with that imbalance. So again, if you find an entry down here, you can use this as an objective near term. And again, because we're not trying to, unless you're like really bullish and you're anticipating a full on reversal, right? But if you're someone who's looking for a quick day trade at the end of the week, this could be your model. This is one of my favorite models that I use at the end of the week. And again, it just makes a lot of sense that you would anticipate a reversal when the conditions are met. But we're going to go ahead and replay. And again, this was the same play that I took. Very simple, guys. Just displacement, liquidity pool raid, upside objective. End of the week, price hits a terminus point where price ultimately reaches into that volume imbalance on the weekly time frame. Simple bread and butter. And again, within pretty much 2 hours. So if you entered on this candle here, that was around 4 o'clock. And then going into 5 o'clock Eastern, you would have hit TP roughly around that time. And price did go a little bit higher after that. So again, it is what it is. But again, that's why I say I just like to have that low end objective, especially because I know this is kind of a reversal play. And you're kind of going quote unquote counter trend. Now, let's go actually and use the example that happened this Friday as well. So again, very, very simple, easy example. Now, we'll go ahead and we'll use this current week as well. This was a play I also posted I posted on my Twitter and my Instagram as well. So Monday, price was consolidating. Tuesday, price had that move lower, right? Let me remove that volume imbalance as it's not observant to this. So now Tuesday drop, Wednesday price, this was FOMC day, so price kind of was a little bit choppy, but ultimately we dropped lower. Thursday, clear drop, and then Friday, it dropped even more, but there was still a setup that was offered. And if you go Thursday into Friday, the only thing about this setup that I did not like, right, it was not really at any higher time frame level. So you could argue that we were below this low, but I was kind of hoping that, price maybe hit this imbalance first before, and you're going to see how it actually did kind of hit it at London close. But if we go to the 1 hour time frame, and this is why we actually never on Thursday, we never reached that terminus point, right? Terminus was actually reached on Friday. However, I still took this buy. Why? Because Thursday still formed a potential stop hunt right here, where price during the New York Open kind of cleared London's low, and then we had an impulse push up. Now, the impulse push up that essentially broke a prior high, this prior swing point, we had this imbalance. So if we go ahead and we put the kill zone timing on, we see again on the hourly, we see the Asian Open right here, and price creates this imbalance point. Now, London Open price kind of comes in, taps into it twice, and then we push up into the New York Open. Now, again, let's go ahead and let's draw the Fibonacci. If we draw the Fib from pretty much the high of the session, this was the high of the week right there, down to the low end at this point, which was right here. Again, you get that 30% mark, got a little bit of a higher move. And for this one, my objective was very simple. I just drew a Fibonacci from that swing low to that swing high. And let me change that. So OTE. And again, I just pretty much targeted the extension objective. Now, also, if you zoom out, right? So this is the hourly. If you go on the daily time frame, we also had an imbalance point that was right there. So this could have been another objective. This is why it's very important to check all the different time frames so you don't miss out on a key level. Key level right here, this could have been your price objective. So again, at this specific point in time in London Open, this was an easy play. Again, price comes into this imbalance point, pushes up. This can be your objective. Or again, if you just want to use the extension targets, and then came back one more time before finally hitting that objective, also clearing out this Asian session high. And again, very simple, easy play, guys. So there's nothing difficult about this setup. It's just something you can add again because you're not going to see it every single week, and it's going to be only one time a week, right? And if it does set up, it'll only set up at the end of the week. So this is just a very simple, easy place anyone can utilize and add to their toolbox because it's something that's very simple to see. Very clear rules, very discernible rules. And again, if you guys want to add this, I highly recommend to do a few back tests, journal it multiple weeks, go back into multiple weeks and see, hey, did this setup occur? And just get familiar with it. But that's the end of the video, guys. If you guys enjoyed this content, please make sure to go ahead and subscribe and like the video. Also, if you guys want more videos like this, let me know on Instagram or Twitter. Send me a DM and just let me know. Also, let me know in the comment section what you guys would like to see next. I appreciate you guys' support, and until the next time, I will see you guys in the next video.